Mitesh, thanks very much for that. Great getting those trades across, and we'll come back to you for more. Sanjay Parikh is now joining us. He's founder and CIO at Sohum Asset Management. Sanjay, great to have you with us here. Thanks very much for your time, and it's a special day. We're celebrating our birthday, 2.5 decades. Great to speak with you.
I just want to congratulate you, and I've watched all 24 years and the way you handle an investor, help them in their wealth creation journey. And, I remembered, as Warren Buffett says, the team has integrity, intensity, and, intellect, all three. So that combination of the entire team has helped the investor a lot. So congratulations.
Well, thanks very much. Thanks on behalf of my co-anchor, Nigel and Rima, and of course the entire team. That's very well put. Thank you, Sanjay. Talk about here and now, Sanjay. What a phenomenal rally, right? And what a week we've had. Actually, even pre-election results, I remember having a chat with Ramdev Agarwal ji. He was saying, post-elections, one way or the other, we're getting a rally. But this kind of a rally, I don't think even he sort of expected. What's the sense from here, Sanjay? Is there more to go in this leg up? A lot of people are asking us that. Why don't we begin there?
Yeah, so, of course, the results have given more certainty to 2024 of a stability. And that probability has significantly increased, and hence continuity of reforms is an important driver. And then, we go back to earnings, wherein next year on 24-25 at 1,100 rupees of earnings. And then 25-26, where it gets now more certain if we have stability. And if we just broadly look at nominal GDP growth plus a little more, then we are talking of 1,250 rupees earning of 25-26. And India has been now on an average 20 times for the consistency of growth. Then we're talking about 25,000 in 18 months, which is almost like a 13% annualized from a current level as well. So, which is not bad, if somebody's participated right from the beginning. And obviously, there could be some risk always, but the risk return, I think, is still favorable if one has an 18-month view. Having said that, in the near term, obviously, you think that it's more like fair value plus, and that's the nature of the market.
Sanjay, afternoon. This EPS estimate forecast of about mid-teens to high teens that the market has for next year, is that under risk, do you think? Is there a threat to that? Because the margin expansion benefit is now coming to an end, and maybe that could reverse going ahead, especially for the consumption stocks.
Right. So, Rima, we do for Nifty very closely, and there are estimates of brokerages right from thousands for next year, 1,070 to 1,150. But by and large, when we look at bottom up, and even if we take reasonable assumptions, we believe that the number of 1,100 doesn't look to be disappointing. And particularly now, crude is also benign, which could be a very important driver of earnings. Commodity prices are broadly benign. The China, clearly there are, still issues there. So China cannot be a driver of commodity for sure in the recent near term. So all that will really help us in our earnings growth rate. And it looks to be a reasonable estimate to have for 24-25 at 1,100. For 25-26, yes, we don't have visibility. As much visibility, but if nominal GDP were to grow at 10-11%, earnings growth of 13 to 15% is not difficult, which takes us to 1,250. And that is where, and 18 months from now, people will look at 25-26. So as we are transiting, we are in December, we'll transit to next year where people will look at both the years. And that's where I believe that it's a possible estimate of around 25,000 in 18 months with a 3 to 5% risk from the current level. And that's the risk return we see.
Hi, Sanjay. Good afternoon. Nigel on this side. Made a lot of friends, a lot of people who have taught me about markets over the years, and you're one of them as well. So thanks for being, a support both of the channel as well as me personally. Well, let's talk about two sectors where you're underweight. One is oil and gas. The second is ITS. In IT, I think Infosys is the largest bet. Now, both these two sectors, you're close to around 700 to 800 basis points lower than what the index weightage is. Both of them have done well, mind you. Would you look to add some, or do you think you'd rather play the other themes? Like for you, construction has worked very, very well, and you're largely overweight in comparison to the index. So will you try to rejig your plans now?
No, so Nigel, right from where we started in May 22, we had a very simple thing of overweight domestic, underweight global plays. And be it IT, be it oil and gas, even pharma, we have a mild underweight. And it's broadly worked. And that's showing up in our outperformance. So on both the sectors, IT, we still believe, and then, we got this mandate of state elections, which is a very big positive surprise, which again tilts back to more domestic and less global, where there are uncertainties. We don't have answers to US, whether it's going to be a soft landing or hard landing. And it's not only US, the world is going through a pain, and even the geopolitical risk. So again, we saw in the last few days where the market gravitated to the domestic themes. And we still believe that domestic themes will play out from here as well. On IT, we'll continue to remain underweight. And the reason is the great ROCs, great ROEs, but the growth is lacking and we don't have clarity. And the earnings and the valuations are not that cheap. We still have the leader at 24 times. Infosys at 22 times. They're not cheap for lower growth rate. On oil and gas, we have increased our weight to O&M companies last month, earlier, not last month, and they were really, really cheap on valuation, and there was an uncertainty on policy framework. But if we were to look beyond, the coming election in May, any government would want to have certainty within a framework. And I think it's very likely that, we would have a framework within a band where they would be fairly given freedom, and they're significantly undervalued. And that's played out in both the O&M companies. So there we are overweight, and of course, the rest of the oil and gas we are underweight.
All right, Sanjay, stay with us. We'll focus on one particular name which is seeing a massive sell-off, Paytm. And
someone who are looking for a good exposure in a fintech market.
Okay, all right. Rahul, it's good chatting with you. Looking forward to keeping in touch and getting you more often on the channel. Thanks so much for joining in and giving us your views on Paytm. But Sanjay as well was in conversation with us. Sanjay, thanks so much for standing by. What's your view on some of these fintech names? Some of them have seen a sharp correction from the top. Everyone thought the worst was behind them, but suddenly you have Paytm from 950 odd, back down to sub 700. Your view on these stocks?
No, I think there is an element of revenue which will certainly take a hit, and it will have an impact on EBITDA of this year and next year. Our estimate is for next year, we're estimating 1,600 crore of EBITDA. There would be a 200 crore knockdown, and that would obviously have an earnings impact. And at times for high growth stocks, you do see some PD rating in the interim. And that's what market has done. But we believe it's a little bit overdone, and it will take time for sure. But once it consolidates, eventually it's a great management. Who understands risk quite well. And we believe, even this was quite proactive on their own, where they could see the risk, and that's where, in sync with the lenders, they have stopped this product, which is very healthy. And as I said, the earnings knockdown doesn't have a direct linear impact. It is a non-linear impact because even price earnings get derated, and that's what has happened. So I think it will take time and then grow slowly, gradually from here on. Things should get better for Paytm.
So in your portfolio, in the new age tech companies, Sanjay, what do you hold?
Yeah, so we have 1.2% of Paytm, and we have Delivery. Delivery is also a little bit than 1%. Luckily, our entry price is better for both, but we'll hold on for this, and we've been holding for both of them. And if there is an overreaction, obviously we'll look to add.
At what level? Paytm's already down 15%, Sanjay. How much deeper does it have to go?
Yeah, I mean, there could be, right, Nigel, it's tough at times, but the excesses happen on either side. So we'll wait and watch, let the excesses happen on the other side, and at the right appropriate level, which could be a little more down, and we may look to act. And at times, we've at least, it's helped us, our contra thinking has helped us, that when markets does overreact a bit, it does pain you for a while, but then eventually it pays off. So the understanding of value at times comes very handy. And we believe, this certainly has an impact. But at the right entry point on an incremental basis, there will be an opportunity to buy and make money.
So you have Paytm and delivery. What about
Yes.
Zomato and Nykaa? Did you consider, investing in these two companies?
No, Zomato, we did not participate on the downside and we didn't participate on the upside. So that's a miss on both the sides. Nykaa, we have looked very closely. We're still not clear about the competitive intensity from other players. So we were watching it. We really like the management, their strategy. But what we're not clear is the competitive intensity. And hence, we'll watch it for a while, check, see whether the growth levels, because all these companies, the implied growth assumptions are very high. I mean, they have to really grow 25, 30% to justify the valuation. So if growth does take a tailspin, then you do get a double whammy of earnings getting impacted and P also getting derated. And this is all future earnings, right? Because near term, there are earnings are very, very minimal for all of them. So you need to be a little more careful, and that's why we will watch Nykaa for a while before we think about investing in them.
I mean, Zomato, you missed so far, but if you, Sanjay, speak with people like Ramdev, we had him earlier with the Zomato management. I mean, he believed abhi to story shuru hui hai. Shuru bhi nahi hui hai.
Yeah.
So it's
Never late. You're right.
It's
never late for a
long-
great management. If you and the way I heard Ramdev ji, if
Yeah.
you think of a 5 or 10-year view, certainly one should keep an open mind, and we also have the same.
All right, Sanjay, it's a great sort of a day to speak with you. Thank you very much for joining us with that perspective. Appreciate it.